Hi everyone, thanks for joining us. I'm Harold Leishman, Senior Partner with LLC Private Wealth and Investment Advisor with CG Wealth Management. Today we're going to talk about the changes to the securities regulations, specifically the life exemption. I've got with me Charles Hethey. He's a securities lawyer with O'Neill Law. Charles, well, thanks for joining me.
Yeah, thanks Harold. Great to be here today.
So can you give me sort of a brief overview of what the changes are for small companies issuing shares or raising capital in the venture market?
Sure. Yeah, no, back in late November, there was a pretty monumental shift in prospectus exemptions, and the commissions approved an exemption where retail investors can invest in companies. We call it the life exemption. And then what the life exemption allows listed issuers, it's only for listed issuers only, not private companies, to do is to raise capital to non-accredited investors without a prospectus, and that's short form or long form. And really the key benefit I see it is that it's going to reduce the overall cost burden for issuers raising capital and give them a larger pool to access for capital. Usually these retail investors, they could only come in through the prospectus or short form offerings, or they would just be buying stock on the market. And for some of these junior companies, maybe that wasn't as beneficial. Mining companies for prospectuses, whether long or short, needed technical reports, which are costly, time-consuming, and of course, going through commission review causes potentially months of lag. Whereas this prospectus exemption, an issuer just simply needs to file a more of a short form offering document. It's not very lengthy at all, just sort of a summary of the business over 12 months, how you plan to use the proceeds, and you just have to deliver it to the retail investor, among other things. The other key benefit for the actual investor side is that the stock is free trading. So it's similar as if they bought the stock on the market versus simply buying the stock from the company and the old exemptions having a 4-month hard hold period, which is less enticing for people. So I think what we're going to see here is a lot of investors pushing issuers to pursue this exemption, and also a lot of brokerage houses. I don't think they'll want their clients, unless it's a very fact-specific deal, to take 4-month hold paper. They're going to really want that free trading paper.
Yeah, certainly 4-month hold has been a big pushback for many clients, and being accredited limits a huge number of investors. They could be young, but not quite at that $1 million net liquid situation, and it sort of blocks them out of the financing market. So I'm guessing we'll see a huge shift in 2023 for most companies going down this path. Are there limitations from the public company side in terms of how much capital they can raise or how much stock they can issue? I think you said earlier, maybe before we started this, that it actually has to be a business, not a shellco. So
yeah, that's right.
What other sort of limiting factors?
Yeah, the general requirements are you have to have an operating business, as you mentioned. You just can't be a shell company. It can't be a financing as part of a reverse takeover or what we call a significant acquisition, which is an asset sizable enough to trigger certain securities law filings. Those you have to use your standard exemptions or go via the prospectus route. The other key points is you can raise up to $5 million under this. For most issuers over a 12-month period. For most issuers, that's perfectly fine. For the larger caps, may not be enough. So they have a slightly higher threshold where you can go from 5 million or up to 10% of your market cap. So for instance, a 100 million market cap company, you can do 10 million, and that's the hard cap. No more than 10 million over 12 months. And it's a look back of 12 months. It's not, in a given calendar year. It's, right. At the time you want to do the offering, how much have you raised under this exemption? So that's a bit of a limit. I mean, some of these larger companies, you may have a 100 million, 150 million market cap company. They may want to do a prospectus offering for $20, $30 million. So this isn't their route. But for a lot of our junior clients, they're going to heavily pursue this because I think one, the firms are going to say, hey, you got to go this route, and two, the cost isn't there. The
right.
cost burden is so much lower than a prospectus offering.
Excellent. And what about any other limitations, insiders participating, anything like that?
Yeah, we fall back to the exchange rules, and we'll use TSXV as a good example. And under TSXV rules, they have their own hold periods they put onto stock. So if you're an insider, you get hit with a 4-month legend, whether you're credited, close personal friend, or you're under the life exemption. You're taking a 4-month hold. Also, consultants they've singled out as also having to put a 4-month hold on their stock as well. So I think what we'll see is that maybe in order to finesse that $5 million, some issuers will say, okay, well, if directors and officers are taking a large chunk of the financing, well, they'll just issue them stock under that, the prospectus exemptions, the standard ones, and then just have more of the retail on that side.
On the life offering, and they can issue warrants as well, or half warrants with these issues.
Yeah, you can issue warrants. You can do flow through shares, any type of security. Generally, you can issue, and it'll all be free trading.
Fantastic.
Yeah.
And in terms, relative to a prospectus issue, full, either short or long, the reduction in cost must be, is it 70% or 80%? I've seen a few come across, and they look like 4 or 5 page documents with not a lot of detail as opposed to the full prospectus. So
that's right. I think you're going to probably see at least an 80% drop in costs, right?
Oh,
because provided that it's not, of course, I'll caveat this, not a brokered financing. Brokered financings require, of course, additional costs with legal opinions and lawyers on it. Due diligence on both sides. But if it's just a standard non-brokered financing, significantly less cost compared to a prospectus offering.
Wow. And in terms of closing this, can the public company manage this on their own, or they have to do this for a brokerage firm? Like a private placement, they can manage that process themselves. Typically, I think short firm or long firm offerings, they typically have to do through a broker.
Yeah, no, that's right. No, for this, they don't need to go through a broker, like a traditional brokered style financing where positions are issued through depositories and whatnot. No, this would just be simply you can engage a broker, whether you want to do a broker or maybe a broker it's finder only. But you don't need to actually have a broker engaged as agent.
Interesting. All right, Charles. So really, from the company's point of view, they're able to go and access capital markets. It's faster. It's cheaper. They can access a much larger pool of investors to participate in their funding. From the investor's perspective, rather than buying stock out of the market, they can directly fund the company. They have free trading stock day one, which is always a plus, and a much broader segment of the investing public can participate. So it sounds like a great step forward.
Yeah, exactly. And these rules came into place for that very purpose too. It was to sort of jumpstart, financing a bit more during, I think it was around COVID time. So that's what they aim for. I think that's what we're going to see. We're going to see a lot of issuers using this. It's opening up the pool. We'll see more retail inside, and retail investors will be happy because they're not stuck with the hold period.
Right. Excellent. Yeah. Charles, thanks so much for coming in. Everyone's Charles Heffy, O'Neill Law, a securities lawyer in Vancouver, and I know counsel for many of the issuers where we hold positions. So thanks so much for coming in and sharing your knowledge on this subject.
Great. Thanks, Harold. Thanks. It's been a pleasure today.